How are we getting on, people? I hope you're all okay. Luke here from LAGFX. We are back today with another Sunday Sessions video. Now, before we jump into today's video, I just want to cover a free course that we have recently launched on our website. It is completely free of charge, as I said. So go over to the website and go and check it out. If you are new to Forex, this is going to be the perfect course for you, as it covers all the basic concepts that Forex entails and that we believe are extremely important to attain and understand before placing positions on the live Forex markets. Now, upon completing this course, you will also gain high roller tokens. These high roller tokens can be used to get coupons that can then be used when you go to the checkout and purchase courses or any paid services that we provide. So this is a great incentive for you to not only learn, but also gain discounts for future things that you may go on to purchase with the LAGFX brand. So after you've watched this Sunday Sessions video, click the link in the description and go and check out the free course. Okay, so jumping into this weekend's Sunday Sessions video, I'm going to be starting off with the Euro USD pair. Now, as we can see on screen, price is predominantly bearish. It has been for some time. This is the prevail trend, and this is what we have been trading. You'll see that we actually took advantage of a small buy position just last week. This ran 75 pips, and we accumulated a nice 1-to-5 risk to reward ratio on this position. Now, price has since gone on to continue bearish, and I believe that eventually price is going to reverse and start introducing that bullish structure that we desire, as I want to see price come to tap into this point of interest that I've got highlighted up here. Now, once we see this reversal take place, once we see price go on to set this bullish structure, that is when we can look to get introduced into the market and place those buy positions. Now, does it mean to say that we can get involved in sell positions while price is still bearish? Absolutely. What I've done is I've highlighted a zone here. So highlight it for yourself. So the zone that we have here is price between 0.9754 and 0.9774. So mark out that area for yourself and look for price to tap into that. We can then look to execute sell positions in this market and ride it down until we see structure break again to the upside. So essentially what we're wanting to see is price tap in, and then we can look to get involved once we have the right confirmation to do so. Now, assuming price breaks through and starts setting structure above, then we would want to wait for a higher time frame break of structure. So I would say this would be classed as a structural high, as well as this here. And once we have breaks in these highs, we can then look to execute buy positions in this market and hopefully ride price up to our higher time frame point of interest. Okay, now moving over to Great British Pound to the US dollar. This is a pair I am wanting to see go bullish as of the open. I'm wanting to see this market start setting in this bullish structure. So ideally, we want to see a break in this protected high here. Once we have that, we can then expect a correctional wave to be put into the market, bringing us back, enabling us to refine our entry and get a nice risk to reward return on this trade. And then we can look to execute those positions. So obviously, I don't know that where price will trail back to, but this is just an example. So we have a demand zone here, or a last sell to buy candle. We would want to place our position somewhere around here with our stop loss just below the structural low that is created, and then we can ride price up into our higher time frame take profit target. So I am looking for buy positions on this market this coming week. We just need to see bullishness be introduced into this market. We need that confirmation and we need that confluence with our trade. Now, longer term and overall, this market is predominantly bearish. I think that is quite evident by seeing how price has played out over these past months. As we can see, price has been bearish. So realistically, we do want to be looking to go bearish longer term, but there's no harm in getting involved in the higher time frame correctional wave, which is exactly what I have highlighted out here. Okay, moving over to Euro AUD. As we can see, again, another bearish market. I have highlighted out how price has played out as of recently, and we can see that yes, it is set in a bearish structure. This is on the day time frame, so this is a bearish market. We want to be looking for those sell positions. What we are seeing at the moment is a correctional wave be introduced into this market, trailing us into this zone, hopefully, where we can then look to place our sell positions moving forward. Now, with the market being predominantly bearish, obviously we want to be looking for those sell positions, but whilst it is putting in this correctional wave, we can actually look to buy into this market pre-selling. So what I've done is I've actually highlighted a last sell to buy candle here. You won't be able to see it because it's actually on the fractal structure, but I'm wanting to basically see price trail us into this zone, deliver us with a break of structure to the upside fractally, where we can then look to execute buy positions before we look to sell longer term. So what we want to see is for price to trail into my fractal POI, price to then break structure to the upside. Once we have that confluence, we can then look to place those buy positions, riding price all the way up into our higher time frame point of interest, where we will then look to close those positions and start placing our longer term sell trades. Now moving over to the USD JPY. This is another market that I'm looking to go short on. As you can see, price is actually very close to a point of interest of mine, so I'm not going to be looking to buy into this before I sell. I'm just going to wait patiently, sit on my hands and wait for price to penetrate the zone. Once we have that penetration, we have the rejection, we have the confluence and the confirmation to enter those sells, I will be doing so. So mark out this zone for yourself, take note of these numbers, pause the video and take note of these numbers. Look for this last buy to sell candle within this bleed out here, get it highlighted and wait for price to penetrate, give you the confluence to enter and then execute those sells. Finally, moving over to AUD USD, very similar situation to the Great British Pound US dollar. We are wanting to see price trail up into a higher time frame point of interest. We want to get rid of all this inefficiency that's been left in the market before we look to place those longer term sell positions where we would take advantage of the next higher time frame impulsive wave. Now again, yes, we can get involved in those buy before the sells. We literally just need to wait for a break of structure on the higher time frames, this being a structural high here. Once we have had that and we have seen price correct itself, so come back down to set a retracement or a corrective wave, we can then get a refined entry where we can place those buy positions and ride price up into our higher time frame point of interest. So as always, I fly through my analysis. I give you my zones and areas that I'm looking out for. I'm quite brief with my explanations, but the most important thing is you know which direction the market is going in, which direction I want the market to go in, and the positions I am looking to place in this coming week. With all that information, you'll be able to go away, apply that to your own analysis, and use that to build your own bias when trading these markets. You'll notice that most of the markets I am looking at are putting in those corrective waves on the higher time frame structure. So it is a bit more tricky when it comes to actually placing these positions, because as you know, the correctional waves are only temporary and the impulsive waves are the ones that we really want to be getting involved in, as that is following the prevailed trend. Now, I hope you've enjoyed my analysis. I hope you've enjoyed what I've gone through today, and all of which makes sense. What I'm going to do now is pass you over to James. He's going to run through his analysis and his bias and give you some areas that you can look out for this coming week as well. If you do go on to enjoy the video, don't forget to leave it a thumbs up. All the support you guys provide is very much appreciated. Now, without further ado, let me pass you over to James.
Hey everybody, hope we're all doing well today. Hope you all had a great trading week in the week that has just gone, and hopefully the analysis that I'm going to provide you with now will help you be profitable in this coming week. So firstly, I hope you enjoyed Luke's analysis. I know he's gone over a couple of pairs that are looking nice in this coming week. I'm actually going to be starting off here on the monthly time frame on the Euro US dollar, and I think we might even bump that up to the 3 month just to give a very quick rundown on what's happening in this market and why I am assuming my bias the way I am. So looking at this, since 1971, this market has been bullish. Okay, we've had an impulse, correction, impulse, correction, impulse. So we're currently working within the parameters of this being a bullish impulsive wave. and then we traded back down, and we are approaching a last sell to buy region paired with a high volume candle, which is likely going to hold market inefficiencies. We know that on this time frame at least, and even when we go to the monthly time frame, this region is unmitigated. So therefore, there's two things price can do at the moment. Either we are going to enter this region, we are going to see price accumulate, and then we are going to see price make a next move higher to continue this overall bullishness, or we'll be able to see price entering this region, making a move lower, surpassing and breaking that swing low, in which case we can assume that longer term, this market is ready to go bearish, and therefore for the foreseeable future, we're talking decades, we are likely going to see bearish price action. So, given that bias and given that we at least want price to trade down to this zone, we can continue to try and get involved in this market in bearish positions until we at least reach this blue or cyan box acting as a level of demand. So, following the bearishness that has traded us down to that, we are working within the fact that we've had impulse down, correctional wave back up, which has tapped into and mitigated this zone. Let's go to a slightly lower time frame. And now we are working within a new impulsive wave, which has come to surpass the previous one. And I have identified the fractal nature of this overall impulsive wave. And what I mean is that taking this as an impulse on maybe like the 8-hour or 1 day time frame, we obviously have more fractalized impulse correction, so on and so forth within that. So the point we're getting at is that if price does want to come back and deliver us with a longer term correctional wave, all we need to do is protect this high. But what we have done is left some zones unmitigated. One of them being this at the very top, where we have a clear buy to sell, clear market inefficiency after the fact. The next one is representing within this impulsive wave, where we have a small buy to sell zone here. Not too big, not too obvious, but it is acting, if we use the wicks, as a hidden supply zone. So I also have an alert there. This alert is no longer relevant as it was there to represent a protected high. And now we are working within the assumption, if we go to a lower time frame again, that this was a correctional wave. We've started this new impulse lower, which realistically what we've done here in the market is redistributed, where you see we've entered into phase A, we've had that selling climax, automatic rally, some secondary tests, we've had that up thrust to clear liquidity, last point of supply, we've then traded through. Now if we are to take this as another impulsive wave and we want to follow price fractally, then what we would do is look inside of here, and I have identified two zones which act as valid areas of supply, where we have clear buy to sell regions paired with market inefficiency. So you see on a lower time frame, the wicks, if we just use the wicks, we've had price pushed down, and then this has been our last buy region. We have market inefficiency outside of that, nothing coming back up to mitigate it as price slowly takes off. We use the wicks there, we have a buy region into a heavy sell-off, which comes to break structure, and we can also pair that with market inefficiency. So that is another zone. As I went down to the lower time frames, I couldn't see any other region inside of here that represented an unmitigated order. So I'm going to set my alerts at the both of these. And what we're going to do is pretty much just wait for price to deliver us with some form of correctional wave, whether that is a fractal correctional wave. And what I mean by that is we trade back up into one of these two zones, hold this as an impulsive wave, or if we want to deliver a longer term correctional wave, we could be viewing this as our overall impulse, which has come to break the previous market low. And price may potentially want to run us back up into one or one of two of these supply zones that have been left unmitigated. So I hope that makes sense. Like when I'm talking about fractal structure, you know, we have many diagrams of what that looks like and what it is, but it's understanding that, you know, on one time frame we may just see an impulse correction, impulse. As we go to another time frame, lower than the one that we viewed this on, we understand that in order for price to get to A to B, it's not just a straight move. So we're going to have structure within this and bearish structure within this impulsive wave lower. What's going to happen here is that we are then going to have bullish structure within the correction wave back up. Same thing again, bearish structure back down. And if we were to go to an even lower time frame once again, we'd see the same thing within each one of these, where we have structure within structure within structure. Now, what I'm saying is that looking inside of this, okay, imagine we're looking at the red line, and that red line is representing the fact that from here to here is a singular impulse lower, okay? Just like from A to B here, single impulse, from B to C, or sorry, B to C up here is a single correctional wave. And then C starts the new impulse, which turns to A. So we have A to B, and we're of course expecting, as we see here, C to trade us back up into one of these zones. So that's scenario A. Scenario B is the fact that we follow the blue structure inside of this, where we see we have impulse, correction, impulse, correction, impulse. And if we want to follow that and follow the blue structure, that means we will hold this high, reverse from one of these, and then go lower. So my point is, the scenario is we're going to trade back up, mitigate one of these. If we break this high, it means we're delivering a wider scheme correctional wave, in which case we're going to break this high, trade up to here, or break these highs, trade up to here. So that's what I mean when I'm talking about fractalization of structure. You know, we could even delve deeper and say, okay, with the green structure, for example, that we're seeing there, if we were to zoom in now on this, because this impulsive wave is a representation of the blue line, right? If we want a representation of the green line, that would be inside of here, impulse, correction, impulse, correction, impulse, correction, impulse, so on and so forth. So we have to understand that we have structure within structure. That is the fractal nature of the market, something we have to understand. And we have to use our analysis to dictate which structure we're following. Now, if we did not understand this, and we did not understand our story, our bias from our top down, if we were to see this high broken, we would assume that we are going bullish, okay? A protected high has been broken, we are going bullish for the foreseeable future. But because we understand the higher time frame trend, we understand when this high gets broken, yes, we may continue to go bullish, but we are only bullish with the purpose of a correctional wave, which means that bullishness may end at this zone, may end at this zone. So we have to be able to pair our top-down analysis into our bias so that we can understand where we are in the markets and not get confused by certain breaks of structure, certain changes of character, because not all of them are going to represent a longer-term change in the trend. So I hope that makes sense, and just something I wanted to touch on because it's something I actually explain or bring up in a lot of the Sunday sessions or videos I discuss. It's understanding what structure we are working within in terms of the fractal nature. You know, just recapping that again, are we working within red structure, blue structure, green structure? And we have to understand when we see a change of character or a break of structure in the market, what does that mean? And what does that mean in terms of where we are within structure? Because that will tell us a lot about how we want to trade that market. So hope that's made sense. Hope that clears up what I'm looking for within this market. Obviously, I just have all of these supply zones identified. 4 regions here. I've explained my reasoning behind them. I've explained what I need to see in order for them to be valid. And then from here, it's just a case of waiting in this next week for these alerts to go off. If so, looking then at entry confirmation. So yeah, with that being said, that is going to conclude my section of this Sunday sessions. I've been focusing mainly on the Euro USD market, hence why I've not really gone on over anything else in this video, no other markets, because I'm not really looking at any of us. So yeah, keeping an eye on this. There's my bias. If you have enjoyed and you want to be updated on how we are viewing, how we are tackling these markets, make sure to follow us on all social medias, LinkedIn, Reddit, get in the Learning Lounge, because I post my outlook on this market every single day on those social platforms. And therefore, if you want to keep up to date with how the analysis plays out and how I am looking to tackle that analysis when it does play out, then make sure you follow in and you can keep up to date. But without further ado, thank you for watching, and we will see you next week in our next Sunday Sessions video.